Well, it was a rough day for the local share market, which slipped from its record high and finished 0.9% lower. And the huge amount of economic data released by our biggest trading partner didn't really help. So that led to big falls across mining companies, though nowhere near as bad as Flight Centre's 20% freefall after it gave a vague but kind of weak trading update. Now, onto China. Its economy, as measured by GDP, grew 4.6% in the September quarter, its slowest growth rate in the past year and a half. But along with the retail and industrial output figures, they were still better than what economists were expecting. Though keep in mind, those figures don't take into account the massive stimulus that China was forced to pump out a few weeks ago. China's housing market, meanwhile, is behaving pretty differently to Australia's. Property prices there have dropped for 15 months in a row. And since peaking in 2021, prices for new homes have fallen 9%, while existing home prices are down 15.5%, which is why Chinese consumers are feeling poor, cutting back on spending, and stuck in a deflation spiral. So naturally, there are concerns about how much steel China really needs, hence the big fall in iron ore prices, though gold went above $2,700 for the first time ever. Overseas, markets in China jumped while the Dow Jones hit a record high, and markets in Europe rose after the European Central Bank cut interest rates for the third time this year. And the Aussie dollar is buying just over 67 US cents. And that's finance.